In this video, we're breaking down the latest developments affecting gold prices, including the Empire State Manufacturing Survey, new comments from Donald Trump about targeting 1% inflation, issues with U.S. jobless claims data, and gold's recent move above the 4,050 level. We'll look at how these fundamentals are shaping market sentiment and what traders might expect in the coming sessions. Number 1. Empire State Manufacturing Survey weakens. According to MetalMine article, the Empire State Manufacturing Survey came in weaker, signaling that economic activity in the region is slowing down again. A softer manufacturing outlook usually increases demand for safe haven assets like gold because investors expect slower growth and possibly easier monetary policy. For gold, this weak data provides upside support, because markets begin to price in a more dovish Fed stance if economic indicators continue to soften. Number 2. Trump suggests a 1% inflation target. According to MetalMine article, a major headline this week came from Donald Trump, who said, "We want 1% inflation, and we're going to get it." This is extremely important for gold traders. If a 1% inflation target is realistically pursued, it implies much tighter monetary policy, stronger U.S. dollar, higher real yields. All three factors are bearish for gold in the medium term. However, markets don't fully believe that such an aggressive inflation target is achievable quickly. So in the short term, the statement created uncertainty, and uncertainty tends to support safe haven flows into gold. Number 3. Issues with U.S. jobless claims data. According to MetalMine article, another key story is that some U.S. jobless claims numbers have been missing due to a system shutdown and data leak. When labor data becomes unreliable, traders cannot accurately judge employment strength. And uncertainty around labor markets usually causes investors to shift toward risk-off assets, again supporting gold. This confusion may temporarily reduce confidence in the U.S. labor trend, which can create short-term volatility but overall leans bullish for gold. Gold climbs above 4,050 as markets lean dovish. According to the MetalMine report, gold has climbed above 4,050, supported by growing expectations that the Fed or future policymakers may adopt a more dovish outlook. The article highlights that markets are increasingly focused on slowing economic data, political uncertainty, possible challenges in achieving inflation targets. When markets lean dovish, yields tend to fall or stabilize, and that gives gold strong upside momentum. Crossing 4,050 is a significant psychological level. If buyers hold above this zone, the market could continue pushing higher toward the next resistance areas. Technical outlook. This is general but aligned with the news direction. On the technical side, gold remains in an upward trajectory as long as it stays above the 4,050 support zone. Buyers are still active, especially on dips. Key levels to watch: support 4,050 and 4,020, resistance 4,085 and 4,120. If price remains above 4,050, the bullish structure stays intact. But if gold falls below 4,050 again, we could see a corrective pullback toward 4,020. Given the current fundamentals, weaker data, inflation uncertainty, and temporary labor market confusion, dips may still attract strong buyers. So in summary, weaker U.S. economic indicators, political comments around extreme inflation goals, and unreliable labor data are all creating a mixed but overall supportive environment for gold. With gold holding above 4,050, the trend remains bullish unless major data shifts momentum. Finally, this is educational content only. Markets react fast to new data, so always manage your risk and avoid oversized positions. If you want daily updates on gold and silver fundamentals, along with technical levels, make sure to follow the channel.